Get the chat over here. Live chat. Let me share the link. Oops. That didn't work. Hold on 1 second, guys. Tweets out. What's up, Craig? Oh, get this thing started in 3 minutes. Let me know the audio is good. I think it should be. It's nice to be back in my home office. Dun dun dun. Should have a good episode today, and hopefully a really good week of trading ahead of us. Yes, it is, Tarka. The link is being posted right now. Benita's telling me that the chat sounds clicky. That's my keyboard, guys. I won't be typing a whole lot during the live stream, so hopefully that's not going to be an issue. What's up, Birdie? Oh, all the way from the UK. That's awesome. All right, yeah, we got the link up in the True Trader chat now. Hopefully we get some more people in here. Make sure, hey guys, if you're watching this and you have a Twitter account or any other social media, make sure you guys share this now so that as many people as we can get are on the live and not having to watch it later when they are not able to interact. Even if it's just go find the tweet I put out and just retweet it for me, guys. That way, just try to get more eyes on it. We're going to get started here. Just a second. How's everybody been? You guys all have a good Thanksgiving? You guys ready to close out this year strong? That's what this is really all about here. Bring it home. All right, let's get it started. First matter of business is let's just get this out of the way. Mustache is gone. Feels so good. Feels so good to get rid of that thing, and it definitely felt funny to look in the mirror and not see it for the first 5 minutes, but yeah, now I don't even remember what it looked like. Guys, so I was in Boston last week, right? Just got home. What is that? Hot or not, Ricky? Oh, God, they're putting polls in the chat now. Guys, so I was in Boston, got home. Was really happy to find a gift box from Cobra. And I never plug these guys, but I totally should. This is I have a few different brokers, but this is my day trading broker that I use every single day. Amazing locates, amazing fees, and the customer service is second to none. And I mean, absolutely none. And that's probably the biggest qualm I've had with a lot of the other brokers. I mean, you can find brokers with very comparable rates on commissions and per share prices and locate fees and whatever. You're not going to find anybody that has customer service like Cobra. And there's a lot of other brokers out there that treat each client like complete trash. So Cobra, thank you for the package. Love it. Hat, shirt. I got a tumbler too for my Moscow mules when they're on the go. Now, I actually was really surprised too to see another package. And so a few months ago in October, I was in Vegas for Traders for a Cause. And meanwhile, at this exact same time, True Trader was having their very first meetup. And they all got together down in Georgia and did a Spartan race. Now, I've heard of other chat rooms doing meetups, and you know, that's great and all, and I'm not putting anyone down, but I have never heard of another community that all got together and did a Spartan race together. And I mean, I was absolutely crushed that the scheduling was a conflict so that I wouldn't be able to be in both places at the same time. I really enjoyed Traders for a Cause. It's always a great event, but it killed me to not be able to be in Georgia with the True Traders doing the Spartan race. And I got home and there was a package from True Trader. They sent me a picture framed of the whole squad that showed up. That, look at, that's 60 something people showed up from True Trader and competed in the Spartan race as a team. And this is gonna hang on my wall. This brought a tear to my eye, guys. I was floored. It was that, and I actually got one of the limited edition Spartan Race True Trader Hydro Flask, so I'll be sipping on that while I work now at my desk, guys. Thank you from the bottom of my heart to everybody at True Trader. Hands down, the best community out there. You can ask anyone that's a part of it. In my opinion, it's not even close. Now, you guys hopefully have subscribed and turned on notifications and have noticed that Goose is doing the midweek watches Thursday morning live as well. And last week's was amazing. He did this. The whole topic was, you know, being optimistically cautious, and he made some really good points about just not seeing a whole lot of confidence in the market from the participants, right? And pointing out that it doesn't take volume for things to go down, but in order for stocks to go higher, they really do need that volume. And without that confidence, there's not a lot of the big players involved trying to put capital at risk. And very timely advice from a very wise sage. That's my man Goose. So hopefully you guys are tuning in every Thursday morning. That's in the pre-market. He basically covers what he's going to be looking at for Thursday and Friday, and he crushed it. So make sure, subscribe, turn on notifications, and if you like what we're doing, make sure you give it a thumbs up and leave comments, right? The comments actually help. We would love to hear the criticism and the feedback. Let us know what you like, let us know what you would like to see more of. And even if you don't like some of the stuff we talk about, let us know, right? Now, last week when I was in Boston and I did the Sunday prep, I mistakenly said that the next episode of Midweek or Method and Mindset was going to be on Thursday. It wasn't. I was totally mixed up, guys. It's actually this Thursday, and that's 5 p.m. at True Trader Net Instagram channel. Not mine, not Kim Ann Curtin's. And it's going to be episode 8. And these things have been going phenomenal. And I love them. And so I'm really looking forward to this Thursday's episode. So hopefully you guys are following that Instagram page. And hopefully you guys tune in. Again, if you don't want to wait till Thursday, methodandmindset.com. We have a bunch of webinars up there, free content you can go consume at your leisure. That is all I had to do as far as the notes. I did want to talk briefly about, hopefully you guys saw the title of this week's. It's the upside to market pullbacks. And there's two different ways I want to talk to you guys real quick about how to take advantage of these market pullbacks. The first goes hand in hand with what I've been talking about for the last few weeks, and that is defining your setups and knowing the ins and outs of everything. And then, I think it was last week, talking about how you can actually be more profitable by winning less often, right? And that has to just do with the risk reward and win rate spectrum, right? The continuum that those exist on. And so one of the things that you guys have a chance of doing right now, which you may not have had a chance to do in the past, is see how well your strategy or your system holds up in different market conditions, right? So your strategy may work really great when everything's just up and away, right? Things just keep going higher, every dip gets bought. But how does your strategy perform in different market conditions? And I actually tweeted about it over the weekend, and it's like, one of my favorite things to do is track data on the days when my strategy or the system I'm tracking absolutely eats shit. And why would that be? It's because it gives you the chance to see, like, are there holes in your system? Are there things that need to be fixed? Just because it doesn't perform well on a big market pullback or whatever does not mean the system's broke. But it will shine light on the weaknesses. And if that's risk management, it gives you a chance to figure out how to tighten that up. If it's picking different targets. So here's the thing. This is actually a piece of advice I learned from Mike Bellafiore, the guy from SMB Capital. Hopefully you guys all know him and follow their page. He actually taught me the indicator of using VIX as an indicator, right? Because everyone uses moving averages and VWAP and all these other things, right? But how many of you actually track your strategy and how well it performs with the VIX at different levels? So that's what you're getting the option or the ability to do right now. When we have a market pullback and volatility starts to push, how does your strategy perform? Does it perform different? Is it still really good? A strategy that performs very, very well and very evenly throughout all types of markets, we call that robust. Now, not all systems are robust, but that doesn't mean you can't trade them. But it does mean you need to know what kind of market environment you're actually in, or else you could get your ass handed to you if you're trying to trade something that works great when VIX is at 12, but sucks when VIX is at 30, right? So this is your opportunity to test your system, to stress test it. Make sure you are understanding how your strategy and your system performs in each different market environment. The other way I wanted to talk about it is this is your opportunity to keep your eyes peeled for relative strength. So when we get big market pullbacks, some stocks just don't seem to budge. Some even still go higher. That should be a big, like, hands waving in the air, look at me type signal from those stocks. So this is your chance to see what stocks are getting absolutely demolished in this market and what stocks have actually held very resilient. That doesn't mean that they're green. They could be red too, but in comparison to the overall market, are they weak or are they strong? And this is your opportunity to take advantage of that. So that's what I meant in the title when I said the upside to market pullbacks, okay? So I really want you guys to think about how that could apply to your system and how that could apply to your trading. And I think you're gonna find it's very, very useful. So let's get into the disclaimer, guys. As always, neither I, TrueTrader, or any of its affiliates are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about today is going to be a solicitation to buy or sell any stocks. It's simply for entertainment purposes. All right, let's get into the ideas. The first thing we always do, guys, is talk about the broader market. And I feel like everybody's on eggshells right now, right? Everybody is thinking, oh man, the sky is falling. If you were on social media at all this weekend, I'm sure you saw a ton of people that are just in full-blown bear mode. The bears are out, the bulls are scared, and there's definitely been some weakness. The market has definitely pulled back, but I mean, is it really as bad as people are making it sound? And what I would actually advise people to try out every once in a while is stay off social media. Block out all that noise. Look at the charts and see what you see for yourself. Now, there have been some shifts in the backdrop, right? Obviously we have the new variant. I honestly don't feel like anything we've been seeing lately, maybe a slight bit, but not the majority of it has been because of the variant. It's because the Fed has shifted what their kind of approach is going to be moving forward, right? So the Fed has been, I mean, I guess this is debatable, but in my opinion, the Fed has been propping up the market, especially the equities. And if people feel like that is going to change, then very well, maybe we do go into a bit of a correction. But why start panicking when we're still just barely off all-time highs? I honestly don't see the bear case being as strong as most people are hawking it on social media. So let's just look at things objectively. Follow me on the path, guys. And you've heard me say this before, hopefully, and that is, I don't care about the pullbacks. What I care about is what happens after the pullback, okay? And I'm going to hopefully try to explain what I mean by that as we get into this. So on the monthly time frame, you can see, yes, December breached November's low. So we definitely have a bit of a pullback starting. Now, it doesn't mean anything to me personally unless we try to push higher and put in a lower high and then roll over. Because yes, we do have room back to the monthly 20, which is currently at, let's see, this is 38, let's just call it 39. For whatever reason, these aren't lining up because there's so many different indicators on here. Sorry about that, guys, but 3,900 is currently the monthly 20 SMA on the ES. So there's room back down to it, but it's not like nothing goes straight down, guys, and nothing goes straight up. The market's been straight up, so pullbacks are okay. It's healthy. It's part of the normal evolution of price. Now, what I will be watching for is if we push higher, especially in early 2022. This is something I'm looking for in January. Will January's monthly candle break December's highs, but then fail to break November's highs? And then we roll over, because that would be pretty ugly in my opinion as far as the bull case, right? If we start making lower highs and then a lower low on the monthly time frame, the monthly 20 SMA starts to look like almost like a foregone conclusion. So that's the monthly chart. Let's look at the weekly. Now, here's where you start to realize, like, man, all this panic talk and all we've done is pull back to the weekly 20. So we got back to the first target. If you were short from up here, that's where you would expect price to pull back to. And it literally bounced right off it. There's the quarterly pivot there. Let's zoom in a little. You got the quarterly pivot right there, and you got the weekly 20, and it started to bounce. Will it hold? I don't know, and I don't really care. All I'm doing is objectively following price. We still have support lower right down here at this. Well, we'll see that when we zoom into the daily chart. But I just, for the point of the weekly chart right now, guys, is just to show you that the pullback's merely to the weekly 20. It's nothing to be scared of yet. And if you weren't on social media reading everybody's fear, then you might not look at this as anything to worry about. But if you were, you might go, oh my God, I need to go all cash, and I need to be stocking up on canned foods in my freaking my zombie shelter. So here's the daily chart, guys. Yes, we got the 50-day. Yes, we're right into some levels that we were talking about in the prior weeks. I still don't see any reason to panic. If we were to come down to this quarterly, that's another spot where I would definitely be looking for some support. And you have the 200-day, which everybody's going to be watching the 200-day if we come down there. And it's lining up very nicely with those September lows. So those are levels of serious support where I would really, really be watching for some the bulls to show up and make a stand. But we have a lot of levels ahead of that. You can see we bounced on Friday almost right off that quarterly, which is the weekly 20. I'll be looking for last week's lows as the first level of support. As far as resistance, exactly like last week, guys, the 20-day, and you have the monthly pivot right there at 46.20. So 46.20 to 46.50 pops back into those levels. I would look at short opportunities. If we get through those levels, then you have the quarterly and the monthly stacked pivot area right there at 46.80 to 46.85. So that's the resistance. And I don't think I need to talk about all-time highs yet. I don't see those happening this week, but if for whatever reason we get through all those levels, then all-time highs are obviously another level of resistance I would be watching. The NQ is going to be no different than the ES as far as what I was talking about, except on the weekly chart, we did not quite get back to the weekly 20. But we did bounce right off this support that was drawn. Let's see. You know what's funny is, yeah, this was drawn a long time ago. I'm happy it held. Again, these are more rough guidelines for me than written in stone. It is always nice to see something respect something pretty accurately, though. It definitely gives a little bit more confidence in that level moving forward. So again, last week's lows are going to be my first level of support on the NQ and the tech stocks. Then you have their quarterly pivot at 15,445, and you also, it's going to put you also right into the weekly 20. Below that, this annual pivot and the psychological level 15K, that's the next level for support. And again, on the upside for resistance, we're looking at this 16.2 area, which is going to be the 20-day and the quarterly and monthly stack pivot area. So those are the levels on the NQ and the ES. And I did want to quickly just briefly show you guys, I don't typically go into the Russell stuff, but on the Russell, you can see this is the Russell 2000. These are like the small cap stuff. They have actually come in quite a bit more as far as levels that are important. So there's this level right down here, this, let's just call it 2100. It's a very key support level. It's been holding. I'll be watching that moving forward. And I also have IWV and IWM over here just to show you that they too pulled back to, actually, no, not IWM, but the IWV was, I wanted to point out that they also pulled back right to the weekly 20 and are holding. So keep in mind, guys, zoom out. Look at those higher time frames when everybody starts panicking. I'm not bearish or bullish. I'm just remaining objective. If we want to head lower, then by all means, let's go lower. I don't care. I'll make money in either type of market, guys. Bitcoin. Let's move on to the cryptos. Now, cryptos definitely had a big flush over the weekend. We lost this trend line here. I still, once again, you guys will probably get tired of hearing me say this, but I still don't see any reason to panic if you were a crypto bull or whatever. It bounced right off that annual pivot and the 200-day. And you can see there's still that support level from that channel that they built. Was it 3-month long channel? So I would still expect there to be buyers right around that $40,000 mark. Now, if we were to reclaim and start pushing back up, I think pops back into the 50-day probably offer good resistance, at least on the first retest, maybe even this 55K level. You have your quarterly pivot there. And remember, I use these so I trade the equities that follow crypto. So the Maras, the coins, the SOSs, the riots, all those names. And yeah, I see both short and long opportunities in this chart. Pops back into 55K to short those names and flushes down into 40K as opportunities to possibly scoop crypto-related equities. So that's the broader market outlook. And real quick, we're going to get into sector analysis. Here's my barchart.com. Let's quickly go into the stock market sectors and look at the matrix. And listen, do I even have to tell you guys it's going to be a sea of red, right? You should know. Just a ton of red all across the board. Now, one thing I do want to point out, when you see consumer staples and utilities being the stronger names, that can sometimes be indicative of a shift in the macro and possibly, you know, getting towards correction territory, but it can change really fast. And I can show you charts. We can go back in the chart history and I'll show you times when both utilities and staples were strong and everything was weak and we just went higher and everything else finally caught up. So the other thing I did want to note though was a lot of the sector ETFs lost some very important levels last week. And the only way I really care to get long on those sectors is two different scenarios. They capitulate and go way lower and flush everyone out, and then we can start fresh, basically like what we would call a reset, or reclaim of those levels and then some productive price action first. I would never want to be getting long just because we get back above a certain level, because a lot of times those push right back up and it becomes resistance and then they sell off. So let's quickly take a look at some of those ETFs. And you'll see like some of them just look really bad. Like you'll remember we talked about XRT, how it could have been just a pullback to some of the support, but it didn't hold and we came lower. Now we're definitely into some of this lower part of the channel. Will it hold? I don't know, but pops back into 95-ish, 96-ish, probably make good short opportunities and things in the retail sector. And you can apply that same thought process to a lot of these names. Another financials was another one where we pulled back, we held this, we popped, made a lower high, and then we came lower. So definitely was some weakness in those. Let's see here. Go through some of these really. I don't want to spend too much time on these. Now you will see I do have an alert set on the utilities sector if we get back above this 68 level. And basically that's based on a weekly chart. You'd see that would be a higher low followed by a higher high, and I think that would take us back to the 70 range. Again, I don't typically trade a whole lot of the utility names, but there are a few in there that have liquidity and have range. So make sure, if you guys don't know the names that comprise those sectors, use your barchart.com and you can come right in here to utilities and you can click and it'll tell you every name in that sector, and you can sort it by different criteria. Make sure, one, that it has volume, and I like to also verify that the name trades range. So let's keep it moving here real fast. Tech is still, consumer discretionary and tech still has room to come lower, in my opinion. You'll see both of these, both of these have room back to where this launch pad occurred. This is the consumer discretionary, and XLK is your tech. Let's see if I can pull that up. Still has room back towards 160-ish is what I'd be looking for. And oil still looks good to me, guys. Remember I talked about this last week. I like the higher time frames on these oil charts. They just look really, really, really bullish to me still. Until we, if we start to look bearish, I'll address it further into the next Sunday prep. But for now, I still think oil looks pretty bullish. That's it for the sector analysis, and now we're going to get right into the ideas. Yeah, keep in mind, guys, where the market's at. There's two, just like I said with what was it? Oh, well, with just the ETFs, was two scenarios, right? Capitulate, head lower, flush out all the remaining bulls, and get resets on a lot of these names. Those are how I'll get long some names, or reclaims, and then productive price action afterwards to possibly have some set risk. But just keep that in mind as we go through a lot of these. Remember, all of my long ideas are day trades only for this week as well, just like I believe I said last week. So strong stocks looking for continuation. The first name is CVS, and remember, this has been a swing idea I've had for a while. I didn't get, I kind of was tempted to start the swing long in the 88s. You have the 50-day and that quarterly pivot, and it did bounce off there. But for the swing, I do want lower. I kind of want to get as close to this 86 level as possible. But I do think there may be a trade in here for a day trade if it were to flush back down either to 90, which is your annual pivot, or the 50-day, which has shown the ability to hold, right? So just in case you weren't familiar with the swing idea, I'll show you the chart on that. And it's basically just this big old rounded bottom, cup and handle type situation where we got the push through, and this is the pullback that I want to buy. And you can see this is kind of the risk reward little thing that TradingView makes very nice for us. Obviously, very, very nice risk reward on this type of trade if we get the entry. But remember, the idea I'm talking about tonight is strictly for the day trade, either a flush to 90 to scoop, or a flush even lower down into this 50-day / quarterly pivot. Keep in mind also, what you're going to notice is all the long ideas in this section are going to be stocks that are still trading pretty close to their 52-week highs. Why would that be? Well, if the market got real heavy and everybody thought it was really weak, these are the names that what I was kind of pointing out in the intro had that relative strength. So that's kind of what we want to keep looking for. ADI, this is the next one for the long idea. You can see the quarterly pivot and Friday's low a day right there. That's kind of what I'm looking for, is that 178.70. And if it fails there, I'm looking for the 50-day, 176.90. So two different areas where I'd be looking to buy ADI on the long side. Flushes on Monday off the open, weakness, scooping 178.70 or 176.90. The next name on the list is an oil name. or energy, DVN, Devon Energy. And again, this one bounced really nicely on Thursday off of these lows from October. And it's a stacked pivot area. You've got the quarterly and the monthly right there. 39.50 is what I'm looking for. And I may even give it to just down to low 39s, like 39.10-ish. But I really think, I like the way that name bounced off that area. And like I said earlier, I like the energy oil sectors at the moment. So if you don't, so I do have a note in here to point out that if you prefer certain price ranges for trades, this trade, if you don't like this price range, could be expressed through NEE, which is another energy name, and it has almost the exact same chart, but this is an $80 stock, and you know the volume on it's really good. I think if we flush down to this 86 area, which is the quarterly and monthly stack pivot area, you can see Friday how well it bounced off that. So basically just kind of different flavors, right? $40 stock versus an $80 stock. Pick your poison. The next idea is INFO. Let me get off that. There we go. INFO. And again, I love the way it bounced off the 50-day on Friday. You have that quarterly right under it. So I'm looking for 124.50 on INFO to scoop early weakness Monday morning. So that's it for the strong stocks looking for continuation. The next section is oversold reversion setups. And again, just like these, the last names we went over were the ones with the relative strength, and we're still trading near all-time highs, or not all-time highs, sorry, 52-week highs. All the names in this list are names that were just until recently market leaders. And that to me is very important because if the market were to find a base or capitulate lower and shake out the bulls, money will typically flow back into the names that people remember being as those leaders. So the first name I have on the list is AFRM. And you can remember everybody loved it this whole run up, and boy have we come back down. What I'm looking for is this quarterly pivot, and I also like the psychological level of 100, and it lines up really nicely with the breakout from, let me see, wrong thing, hold on. Try to drag that across. So you can see this level here. I'm just looking for a retest of that, thinking that we may get a nice bounce from that area. Thing has a ton of range, 11.5 ATR on this, and it's very liquid. So I like names that have range, and I like names that are liquid. I love it when they have both. The next name on the list is Unity Software. And again, this one already bounced on Friday. It bounced off the weekly 20 and the monthly pivot right there at 140. So I'm looking for a retest of that level. If that were to break, I would probably look for it at the annual pivot right there at 131. But I really do think this 140 spot is going to give a good trade if we flush early Monday morning. Again, a lot of this is going to be very dependent on where we open on the ES or the SPY, guys. If we have a big gap up, a lot of these may gap up too and take away these trades. Big gap down, we'll see where these are at. But again, we'll have to kind of wait to see what Monday morning brings us in terms of where the market opens up. The next idea on this list is ASAN. This thing got absolutely crushed on their earnings, and but it was a very strong stock for a long time. This beautiful trend, and again, looks a lot like that U chart where it's just a big pullback to some key levels. So what I'm looking for is 60 psychological round level. You got the annual pivot at 60.40. So I'm looking for a little bit more downside. I'm thinking maybe we got a bunch of people that bought this on Friday, and if we were to gap down, I think they all get shook out, and then maybe we get the bounce off 60. So that's the idea on ASAN. Moving on, CrowdStrike is the last idea on this list, and it bounced right off the weekly 20, right off the monthly pivot, and right off that quarterly pivot. So I'm looking for 189 to 190. That's kind of the levels there. Actually, what did I write down here? 190. 190 area is what I like on CrowdStrike. So opening flush with risk. Risk is pretty defined already. We basically would be risking under Friday's low a day. Now, let's get on to the shorts. And one of the things I will preface this section with is I could have put 100 stocks on this list. There's a million names that have the same chart. I wanted to pick ones that obviously have range, obviously have liquidity. So one second, let me get into the weak stocks looking for continuation. We'll see what we have on here. eBay, I really think, this trend line snapping like that, I feel like any pop back up into 70 to 71 is actually 72, I'm sorry, is kind of going to find a lot of sellers. So I'm looking for eBay as a short on a pop back into 70.8. And if that fails, I'll look for the 20-day. I might even start, yeah, there's a monthly pivot at 70.65, so I may start a little before 70.8. We'll have to see. I don't like to guess the top, guys. I would like to see an emotional spike up into those levels and see the sellers show up. That's eBay. Next idea is PLTR, and Kathy Woods took a shellacking last week. The whole ARK tech fund got decimated, and this is part of it, right? You know what? Somebody probably is going to put this in the chat because I don't have it at my fingertips, but they may have actually sold their Palantir position. I can't remember if they still own it in the ARK fund or not, but at one point it was her darling, right? So this one here, I want the 20-day and the annual pivot up there at 22. I kind of get the feeling we don't get it. I think it's going to you can see that they already tried to push early last week or late 2 weeks ago on November 29th. They tried to push and it just rolled over and made new lows. So that may have been the attempt at the 20-day. We may not get it. It may just stuff right into this 20 level. 20 is a psychological round number, and you have that quarterly pivot at 1996. But the problem with it is that's only a point away from where we closed on Friday. I'd much rather see a bigger move up and then see the bear step in and smack it right back down. So I'm personally going to wait for the 20-day. Again, we may not get it, but I'm going to keep it on watch, guys. Now, this next ticker is probably going to get me crucified because it's such a cult stock. AMC, guys, this thing looks really, really broken to me. They lost this pennant, and if you guys were to time travel back a few weeks ago, every single bull, ape, whatever you want to call them, was pointing out this pennant on AMC. Oh man, it's the same pennant that happened back here. It's happening here. This is going higher. Well, it failed, and so when everybody's on one side of the trade and the pattern fails, this is what happens. Okay, so I'm looking for any pop back into 35 to, I think I have 34 even written. 34 to 35 is what I'm looking for on AMC. There's no pivots there. It's just pretty simple. You can draw a straight line across from here, and you'll see this is the level I'm looking for a retest of to see if they roll this back over. And I have zero problem stopping out and re-entering if they were to somehow, by the grace of God, get this thing back to the 20-day. Again, I apologize to all the apes out there who are probably ready to do a Google search on me and find out where I live so they can come beat me up, but I'm just being objective, guys. FSLY is the next name on this list. I actually, prior to the market weakness, liked this thing for a possible swing long. We pulled back right to some very important key levels. But at the moment, for a day trade, the swing long idea is a swing, guys, so keep that in mind. The day trade on this for me would be any pop back into, the obvious level is the 20-day and the weekly 20 up there in the 50-day, all stacked right around that 44.50 to 45 area. But the other thing we could do is lose August lows. And if we lose these August lows, I'm shorting all pops with defined risk because, this is kind of a make or break level that needs to hold. I think we get under these levels and all pops are going to get sold off, guys. So that's the idea on FSLY. Make sure you guys understand there's two ideas on the same ticker, right? Pop back into the 20-day to fade, or we lose August lows and then I'm shorting pops with defined risk. The next section is overbought reversion setups, and all I have written down for this is LOL, and that is because good luck finding something that looks overbought out there right now. So nothing in that section grabs my attention. Obviously, there's a lot of small caps that can be firing off. There's always going to be small caps, but I try to keep these Sunday preps focused on the large caps, or if I do put small caps in there, they need to be A+ setups where I know I can put my neck out on the line, put an idea out there, and not have it be so dangerous that I have to worry about a bunch of people getting hurt following it. So that's the ideas. Now I'm going to try to hop into the chat and see what we got as far as questions. I should have said this earlier at the beginning, guys, but I've noticed a lot of questions revolve around positions you guys already have and you're looking for confirmation bias. I don't want to be that guy that you come to and just like, please tell me my stock looks good. Like, no. But if you guys have ideas or you have a question about like what I personally may see in a stock, and you don't have any emotional attachment to that trade, those are the kinds of ideas I want to talk about and discuss if you throw them out there. Let's see. Someone asked what TradingView sub I have. I have the premium plan. Guys, TradingView is so cheap compared to what it does that, in my opinion, it's just, and you know, you'll hear Goose and Adrian and the guys that have been around for a long time in this business say this too, and that is like, spend the money on your tools, guys, because there's certain things you don't want to cut costs on, right? You don't want to be trading from your phone because whatever, it's mobile and it's easy and you have it. You don't want to be using Twitter as your news service. Like, pay for the right tools, guys. And TradingView is so cheap and so powerful that it's well worth the money. I get so much more value than what I pay for it, and I'm pretty sure it's like $20 a month. So that's what I use for TradingView, is the premium. DVN trades so thin. These are day trade ideas. DVN, let's see here. I mean, it trades 9 million shares a day. It's not thin at all. And what I like to see as far as liquidity is I like to look for 2 million shares per day or higher. Obviously, the cheaper the stock price, the more I like it to trade, because that, hopefully you guys understand the concept of dollar volume. But yeah, like, I totally agree. We start getting in like sub 2 million shares per day, and I don't like trading them at all. Even for my scanners, I have like a 1.5 million average daily volume as a threshold. And then when I pull a chart up, I'll make the decision on the spot if it's trading with enough liquidity. But DVN definitely trades, and it's definitely liquid enough for me to trade. Let's see. Verdi says, on TradingView, you have volume at the bottom of your chart. It looks different than my volume on TradingView. What indicator are you using for volume on TradingView? It's literally just the volume. If you go into indicators, let's see. Yeah, if you go into indicators and built-ins, I think you just type volume. Whoops. It's right here. It's literally just volume. I do have, you'll notice I have a range or average daily volume on there. That's the red line, just so I know what it trades on average. Is that all the questions? I was thinking there's going to be more questions this week, but if not, we can wrap it up. I got a lot of stuff to do, and there is a Chiefs football game to watch. Let me quickly just take a look at the chat and see if we missed anything. No, it doesn't look like it. All right, guys. Let's see. MA recovered from a dip. P in the 30s trend up. Well, yeah, a lot of the financial names have some, like, if you guys remember the XLF chart we looked at earlier, right? Financials lost some key levels, and so even if you see them pop, right? Like I actually was looking at MS earlier as a possible trade, because obviously flushes down to where they held, you may find support, you may get a really good day trade out of them. But as far as if they start pushing early in the week, there's a lot of levels of resistance above them, and keep in mind that if they push into those resistance, you may end up with some pretty good short trades. It doesn't mean I'm bearish on financials. Trust me, financial stocks are usually pretty strong and do pretty well, especially when they get big sell-offs. If you guys remember how we traded Capital One a few months back or whatever, there's been a lot of really good opportunities on the long side. But I'd either like to see this capitulate. This is the ETF right here, guys. So I'd like to see this capitulate and shake everyone out, or reclaim this 39 area, and then I'd like to see some higher lows. It would take a few days minimum of price action to show me that they're holding levels. It's not something that, like, if it reclaims Monday and then intraday I'm looking for higher lows. No, I need to see a few days of buyers stepping in back above levels, and possibly even longer. It may be weeks it takes to build above a level. And that's the other thing. Stocks can go lower, stocks can go higher, stocks can go sideways, guys. Remember that. Keep in mind, when you make plans, you make contingency plans, right? I want a plan for if stocks plummet, I want if stocks spike, and I want if stocks base. Because if the ES or the SPY or the NQ and the Qs go sideways and start to base, that doesn't mean that I don't have a job to do. I definitely have a job to do, and that is spot the stocks with the relative strength, spot the other stocks that are holding levels and building bases as well, and start looking for big opportunities for the bigger picture trades. Obviously, that's different than the day trades that I'm throwing out there right now, but just keep in mind that you need to always be stalking. That's your job, guys. Vitor is asking what my view is on the Bitcoin stocks. I talked about it earlier when I talked about Bitcoin. Basically, let me go back to the main watch here and pull up Bitcoin. Remember, I either want this to capitulate out down to 40K, which is where I would look to buy all the maras and the riots and the coins when they're flushing down into their respective support levels, or any pop back into the 60,000 level, which is where the 50 days at, is going to have me looking for shorts on those names. So, like, let's pull up the individual charts and you'll see if Bitcoin were to flush down to 40K, that probably is going to put Mara somewhere around this annual / quarterly pivot, 30 round psychological level. That is where I'd be looking to buy Mara. Riot. If Bitcoin were to flush to 40K, I can imagine Riot's probably going to be somewhere around the weekly 20 / annual pivot, right down there in that 22 to 23 area. So that's where I would look for buyers to show up on that name. And so that's how I think, guys. I think in terms of what things are correlated to, where that, all these names are going to follow Bitcoin and the crypto space. So you have to understand where these are going to go if Bitcoin goes there. So same coin, opposite side. If Bitcoin goes 60K, I'm imagining Riot's going to be up here in the 36, 37, right into the 20-day, the underside of the 200. And you better believe any spike into that level, and I'm going to be looking to short it. And Mara, same thing. If Bitcoin were to push 60K, I'm thinking Mara is going to be right up here. Actually, Mara might be a lot higher, because if Bitcoin were to get all the way up to 60K, you're probably talking about a 68, somewhere in that level on Mara. Guys, so I see OTC's asking about NEO. Keep in mind, there's so much uncertainty surrounding the Chinese ADRs. I'm hands off on all of those. So the NEOs, the Babas, the Baidus, those are names where there's a lot of headline risk, and I'm not personally taking any trades on them, and NEO's one of them. Okay, now keep in mind, NEO's part of the electric vehicle theme, but you have all these other names out there you can trade that don't have that headline risk that NEO has. So keep that in mind. I'm not touching NEO. Now, that doesn't make it an automatic short either. Let's pull up the chart. I know NEO sold off a lot, and yes, pops back into like 36 or maybe 38 might offer great shorts. But if something, you could have the exact same headline risk to the downside, you could have to the upside. Things can develop in the macro, a headline come out, and something that you're short bias on because it's Chinese related could just rip your face off. I'm personally just leaving them alone. I feel like there's so many stocks out there. Why mess with the ones that could hurt you? Let's see here. 1 second. How do I set the support and resistance lines? I'm not sure if you mean like just drawing them on the chart, or how do I pick them? Yeah, someone else is pointing out the Chinese weakness. Oil tanker versus speedboat concept. Yep. I was in Massachusetts, so I am back in San Diego, and I'm a Chiefs fan, guys, even though we performed so poorly against Tampa Bay the last Super Bowl. But let's see. China is risky, yes, but government likely backs NEO, where they won't back Didi or Baba. Listen, I'm not going to put that kind of opinion out there because, again, I think there's so many other names to trade. There's no point in messing with NEO when you have that Chinese headline risk. Even if you think that the government's going to back them. It still doesn't matter to me. All right, guys. That's it for this week. Everybody stay safe. Hope to see you guys Monday in the market, ready to crush it. If you have other questions I didn't get to, throw them in the chat. I do read the comments, and I will try to get to them. All right, guys. So let's have a great week ahead of us. Let's manage our risk, focus on capital preservation, and let's close out the year strong, guys. Peace.